Be honest, when was the last time you thought about your current business insurance policy? If your existing business insurance policy is renewing on autopilot each year without checking out Zensurance, you're probably spending more than you need. That's why you need to switch to low-cost coverage from Zensurance before your policy renews this year. Zensurance does all the heavy lifting to find a policy, covering only what you need, and policies start at only $19 per month. So if your policy is renewing soon, go to Zensurance.com and buy your policy online in just a few minutes. Zensurance, mind your business.
Frequency Podcast Network. Stories that matter, podcasts that resonate.
Every economist on edge.
High living costs.
The real estate market is showing
an erosion.
Canada's economic struggles.
Value of the loonie against the greenback. And rising unemployment.
Canada's economy is sliding dramatically.
Navigating this economy has never been more confusing or frustrating, and we are here to help with that. I'm Jordan Heath Rawlings, and this is Today in This Economy, where we keep you informed about what the latest economic news means for you. All data that we've seen, basically going back to the beginning of the pandemic, indicates that Canadians are struggling with their credit cards, carrying balances, holding high interest rates, and falling behind on payments. But what if some of those Canadians, maybe even you, just aren't using the right card? There is an abundance of choice when it comes to choosing a credit card. Some of them give you cash back or allow you to collect points or even get you discounts at certain places. But with all these rewards and varying interest rates and varying annual fees, what do you actually need when you were looking for a new credit card in this economy? I am chatting now with Shannon Terrell, who is a lead writer and a spokesperson for NerdWallet. And Shannon, I guess one of the things you do a lot there is write about credit cards in general and personal finance. Welcome to the show.
Thank you so much for having me. Pleasure to be here.
A lot of Canadians are struggling with credit card debt right now. A lot of people are looking at their credit card statements and wondering if they're getting the most value for their money, how they might be able to manage it better. So I'm going to start by asking you this. How do you know when your credit card's not working for you or you might want to consider a different card?
Sure. So I'll say there's three things that we should think about in terms of assessing whether a credit card's a good fit. So first and foremost, not offsetting the annual fee. If you have a credit card and you're paying an annual fee to carry that card, ideally, the annual fee is only worth paying if you can get enough value from the card to offset the cost. Now, annual fees for Canadian credit cards can range well over $700 and can come with a variety of perks and benefits. But if you aren't regularly capitalizing on those benefits, then the annual fee may not be worthwhile, and we may want to either explore a card with a lower fee or no annual fee. Next, I'll say we may want to look at getting another card if we're not getting enough from the rewards structure. So if you have a credit card that earns rewards and you find yourself either regularly forgetting about the reward structure or the rewards redemptions,
right,
this is a great sign that perhaps the card isn't really aligned with our spending habits. And finally, I'll say if we find ourselves often carrying a high balance on our credit card, or if we are consistently only paying the minimum amount, this might be a sign that perhaps we need to reprioritize the way in which we're managing our credit. And maybe now is the time to potentially explore a balance transfer credit card option.
Okay, so let's say you're looking at it and you meet one or more of those criteria and you're switching from one card or you're even just adding another card. When you look at your own finances, what do you need to consider before you even start looking at your options out there?
So there are two things I would urge folks to think about before they enter into the application process. So first and foremost, understanding your financial goals. I think that a credit card should really be viewed as a financial tool. So are we looking to build or rehabilitate our credit? Are we looking to earn rewards? Are we trying to have a larger financial cushion in the event of an emergency expense? we really want to consider what we want our credit card to do before we enter into that search. The next thing I think is vital is knowing your credit score. So a good credit score, which would be categorized as 670 and above, that type of credit score can qualify you for a higher tier credit card. We don't really want to enter into the application process blind. So having a better idea of your credit score and history, that's going to help you make a more informed decision about the type of credit card that you can target. So I'll say for folks who are interested, if they do want to access their credit score, they should know Equifax allows you to access your credit report online, and it updates monthly. So that's one of Canada's main credit bureaus alongside TransUnion. And actually, a lot of online banking services these days also let you access your credit score, like CIBC, RBC, and BMO. So lots of options there for folks who want to check in.
Okay, so you've done that and you've got a sense of where you're at. Where do you start? How many credit cards are out there? Give us a sense of the scale and how you begin to sort through that.
I mean, there are hundreds of credit cards on the Canadian credit card market. So there are plenty of options out there, and it can certainly be overwhelming for people who are trying to find the ideal card. So I'll say the best card for you is really going to be the card that aligns with your spending habits and your financial goals. So broadly speaking, there are a few different factors we're probably going to want to consider as we're comparing. So we touched on this, but annual fees. We want to decide if we're comfortable paying an annual fee.
Right.
There are strong options out there with no annual fees, but generally speaking, cards with fees often come with better perks like stronger rewards rates and better insurance coverage. We want to continue to think about rewards as well. So what type of reward we want to potentially get, whether that be cashback or travel points or general rewards points, that's going to narrow down your search. We want to even look at welcome bonuses. So sign-up offers for credit cards can give a really nice boost of points, cashback right off the bat. But we want to look and make sure we understand if there are any restrictions or eligibility criteria for those welcome bonuses. Typically you need to spend a certain amount of money over a set period of time to unlock the bonus. And finally, I'll say just additional perks in general. So, cards may come with extras like travel insurance, extended warranty, no foreign transaction fees. No two cards are identical. So finding that ideal mix of features and benefits is really going to be well worth your time in your search. And again, we always just want to be thinking about our long-term financial goals and our spending habits.
When we're talking about interest rates on a credit card, how much can they vary card to card? And, besides the prime rate, what can drive that number? And what's a good deal right now?
So, the credit card interest, this is what obviously, borrowers are going to be paying if they do not pay the full balance each month. Now, in Canada, most credit cards have a purchase interest rate of around 19 to 20%. This is by and large the standard, although there are a few exceptions. This is the rate typically advertised front and center when you're exploring your card options. But I think, sometimes what some folks don't realize is there may be up to 4 different types of interest rates that could apply to a credit card.
How does that work?
Sure. Yeah. So the purchase interest rate for everyday spending, that's at about 19 to 20% that you can expect for most credit cards. A card will also typically carry a cash advance rate. So this would be for ATM withdrawals. And it's usually a few percentage points higher than the purchase interest rate. And it will start accruing immediately when you take that cash out. We also want to be on the lookout for balance transfer rates. So these are special interest rates that apply for moving balances between cards. And then finally, the penalty rate. So this rate may apply if you miss multiple credit card payments, and it tends to be much higher than the purchase interest rate, often closer to about 30%. So we want to be on the lookout for each of those when we're comparing our options. But by and large, folks should expect to see an interest rate of about 19 to 20% for purchases. And as I said, there are a few exceptions on the market, but even so, those low rate cards are typically only sitting at around 10 to 12%. So that's about the most competitive purchase interest rates get in Canada.
So you've looked at the interest rates now, and you know kind of what you're comfortable with, I guess. Let's look at the rewards. How much should they factor into your decision? On one hand, I know tons of folks love their points, their travel and all that kind of stuff. On the other hand, at the end of the day, like, we're trying to talk about what actually makes financial sense to your bottom line.
Sure. Yes. So we do see a variety of rewards programs in Canada. And in fact, there are credit cards that don't earn any rewards at all. Some no annual fee cards, some student cards, some secured cards don't earn rewards. But in return for this, they are offering a lending structure that's more beneficial for certain types of borrowers. Now, whether or not a rewards program is a good fit is going to really depend on your spending habits. So no two Aeroplan point cards are the same. No two cashback cards are the same. We want to take a really close look at the type of reward that's offered, but we also want to pay special attention to the earn rate. So a lot of times credit cards will offer different earn rates for different spending categories. And by that, I mean perhaps a cashback card earns 5% on groceries, but only earns 3% on transportation. So we want to make sure we're grabbing a credit card that is really going to align well with where we typically use our credit card and where we typically spend our money. And that's really what's going to help us narrow down our rewards options.
Have you guys looked at which kind of rewards are actually worth it in terms of the fees you might pay or the interest rates or even just how much you'll use them? Like, is there a difference between cashback or travel or other stuff?
Yes, absolutely. So at NerdWallet Canada, we have done comprehensive research into the major rewards programs in Canada. Now, cashback is pretty easy to quantify. So generally speaking, a cashback rate is going to come out to, a cent on the dollar. But typically what we see for rewards programs like Aeroplan, Air Miles, even American Express rewards points, the valuation will hinge on the way in which the rewards are being redeemed. So for example, we found that the average cent per point for an Aeroplan point in Canada is about 1.59 cents, whereas the average cent per point for an Air Mile is 16.07 cents. So quite a range there. But the catch is you can typically earn one Aeroplan point per dollar spent, whereas you typically have to spend at minimum $25 to earn one Air Mile. So while it's really good to keep in mind the average valuation point per point spent when you're looking at these rewards programs, it's also important to remember no two rewards programs are going to be created equal, and the way in which you redeem those rewards is going to matter tremendously as far as the value is concerned.
One of the first things you mentioned was the annual fee and how important it is to consider that. What kind of fees should you be willing to accept? And how do you try to determine the trade-off between the fee and the value of whatever that card is giving you?
Yes, so in Canada, we do have cards with annual fees that range from $0. There are no annual fee cards, and there are other cards in excess of $700 annually that you'd pay to hold. And whether or not that annual fee is worth paying all comes down to the way in which you use your card. So some of these cards we call the mid-tier cards, typically with annual fees in and around $150 to $200. You're typically going to see middle of the line perks. So there will likely be some travel insurance. There will likely be some additional benefits, perhaps concierge service 24 hours a day, roadside assistance, perhaps some gas discounts. But the higher tier the card, the more expensive it is, but the more premium the perks. So, those $500, $600 a year cards, that's when you're going to start tapping into perks like unlimited airport lounge access, free checked bags, those really premium travel perks that people love to take advantage of when they go on vacation. And whether or not the card is worthwhile for you depends on whether you're going to use those perks. So for example, a travel card that's going to cost you $500 a year to carry might not be worthwhile if you don't travel all that often and you're not going to be able to use those free checked bags or that airport lounge access. So again, we want to take a really good look at what the card is bringing to the table. And this is going to range from those travel perks to insurance coverage. We want to take in the full scope of what the card is offering us to determine whether that annual fee is worthwhile.
Let's say you've made a decision or, you've narrowed it down to a few cards, but you're switching cards, not applying for a new one. How do you go about that process of applying and transferring the balance? Because I know we transferred our mortgage a while ago and you got to jump through a whole lot of hoops, right?
Yes. So when we're moving our balance from one card to another, there are quite a few credit card online application processes that allow you to initiate the balance transfer from an existing card right there in the application. It's quite easy. It's quite accessible. But what I'll call out for people is if you are considering moving your balance, one thing you want to be on the lookout for is the balance transfer fee. So a balance transfer fee is usually expressed as, between 1% to 3% of the amount transferred. You want to make sure that you're factoring this in, especially if you are transferring your balance to what we would call a balance transfer credit card. This is a credit card with a low interest rate for a set period of time. Oftentimes, people will take advantage of these cards when they're trying to consolidate their credit card debt. This is when we really want to pay attention to the balance transfer fee and make sure that we aren't losing any money in the transfer over of the credit card debt.
The last thing I want to ask you about is, so far we've talked a lot about how to maximize your reward points, how to make sure you're getting some nice perks, all that kind of stuff. But any advice for people who are really struggling with debt? We know right now, there are new reports right now about just how high Canadian credit card debt has gotten. And these people are unfortunately carrying really high balances or have bad credit. What do you do in terms of choosing credit cards or moving them to, if not solve that problem, then at least mitigate what you're going through?
Sure, yes. I think that credit card debt has been especially problematic for folks over the last couple of years as we've been facing this high interest rate environment, as we've been facing record-breaking inflation. And so if you find yourself struggling with credit card debt, as I just touched on, a balance transfer credit card is one option. So these cards let you move high interest debt to a new card. The card often offers a low interest rate, sometimes as low as 0%, for an introductory period. This introductory period typically lasts about 6 to 12 months. And the benefit here is that when you move your debt over, you're getting that window of time in which to pay down your debt without accruing any interest. So that's one option. Now, for folks who are perhaps struggling with their credit, perhaps they are trying to rehabilitate their credit, another option could be a secured credit card. So this is a credit card in which you put down a security deposit, and that typically becomes your credit limit. And these secured cards are a fantastic tool for building or rehabilitating credit. So practical options for folks with either no credit history or a low credit score. These cards tend to waive the credit check, so they're often easier to qualify for than a typical traditional credit card. The only drawback here is that many secured cards tend to offer fewer perks. They're more of a bare bones option than the standard unsecured card, but again, a great option for folks who are maybe trying to build up their credit score and rehabilitate their credit.
Shannon, I really appreciate you joining us, and thanks for this great factual advice.
Yeah, absolutely. Thank you for having me.
That was Today in This Economy. And if you have an idea for an episode or a personal finance question, we want to hear from you. To get in touch with us, email hello@itepod.ca, or you can call us at 416-935-5935 and leave us a voicemail. But if you'd like us to play your voicemail on the show, you got to tell us that, because we won't run your audio without your permission. This episode was produced by Robin Simon with sound design by Matt Kesselman. Stephanie Phillips is our showrunner. Mary Jubrin is our audience development lead. Diana Kay is our business manager. And I'm Jordan Heath Rawlings, your host and your executive producer. Thank you so much for listening. We'll talk to you next week.
Are you self-employed? Don't think you need business insurance? Think again. Business insurance from Zensurance is a no-brainer for every business owner because it provides peace of mind. A lot can go wrong. A fire, stolen equipment, or an unhappy customer suing you. That's why you need insurance. Don't let the "I'm too small for this" mindset hold you back from protecting yourself. Zensurance provides customized business insurance policies starting at just $19 per month. Visit Zensurance.com today and buy your policy online in just a few minutes. Zensurance, mind your business.